Hi, I'm Keith McCullough. Welcome back. Today I want to talk about currencies. Specifically, I want to talk about the big three currencies. The big three currencies in the currency war, which are of course the US dollar, the euro, and then finally the yen. What I want to give you is a quantitative overlay and then get into the behavioral setup here as well. So I'll go through 5 specific charts. So the first thing is just to call it out for what it is, which is from a quantitative perspective in the Hedgeye model, the US dollar is in a bearish formation. Now, a bearish formation means, quite simply, that it is bearish across all 3 of our core risk management durations, which include our immediate-term trade, our intermediate-term trend, and our long-term tail. Now, the upside down of the dollar being in a bearish formation is, of course, not surprisingly, that the euro versus the dollar is in a bullish formation. So again, bullish trade, bullish trend, bullish tail. It's a very good setup. So now let's just kind of look at those levels from a trend perspective specifically, because that's what you should really care about. This is the one duration that our institutional customers really care about most because it has the best back test. So if you look at the US dollar index here on this slide, you can see that at 81.14, the trend is bearish. So in other words, you would stay short the dollar provided that the price of the US dollar index remains below 81.14. Now, the second chart here on the euro versus the dollar is that you can see quite simply that it's in a bullish formation. And it would continue to be in a bullish formation unless the euro were to break $1.35 versus the dollar. This is where a lot of people have anxieties. Of course, the Europeans cut interest rates and tested that line, but weren't able to hold below it. So again, the European Central Bank was unsuccessful in proving that they're more dovish on the margin than the US Federal Reserve is for the dollar, which is saying something in and of itself. Now finally, let's look at the yen chart. A 6-month chart of the yen, you can see again, and again, because we look at things versus the dollar, we don't look at in terms of Cocoa Puffs or some rice or something. You know, people like to talk in terms of, I don't quite get that. But what I like to tell you is the yen versus the dollar, because in terms of the dollar, the yen is obviously broken. And again, for that to change, you'd have to change that below the dollar's trend line of 99.67. So that's that in terms of the bearish formation for the yen. Now, the final part that I want to go through quickly is the behavioral setup in currencies. This is critical. This is where consensus lives. So what we look at is the net long or short position from a CFTC futures and options contract position across all 3 currencies. So you can see this on this chart. The US dollar currently has a net long position, so people are long the dollar into the Fed, which I wouldn't be. Secondly, they're long the euro, but they're not long the euro as much as they used to be, which is why I like the euro more. 3 months ago, for example, the net long position in the euro was almost 40,000 contracts. And then finally, the mother of all short positions is this Japanese yen short position, like almost 130,000 net short contracts. That's one of the biggest net short positions we've ever seen in any currency. So again, when you think about this full circle, there is a currency war going on. People understand that. They understand what the Japanese did to their balance sheet this year. That's why you got a raging short position at the lows in the end. Don't forget the yen's down 16% versus the dollar this year. But again, that's a contrarian signal, so you don't want to be dogpiling the short position in the yen. What I'm very interested in doing, which we currently have on as a position in real-time alerts, is of course short the dollar, which isn't a net short position at all. So again, that's how I'd like you to be positioned into and coming out of the Federal Reserve decision tomorrow. So that's it. If you have any questions on currencies at all, please send me a tweet. @Keith McCullough is my Twitter handle.